how do investors make money exactly? We get lost, or it's easy to get lost in that question. In this video, I'm going to clarify exactly how investors make money. This isn't necessarily just beginner information. I'm going to touch on the different ways that investors can make money, both from beginner investors to more advanced investors, and how those different components contribute to the ways that investors make money, those different methods, how they contribute to how investors make money. Hi, I'm Camille Gaines here, and on my website, retirecertain.com, I write about and talk about investing. I'm not trying to sell you wealth management services. I simply like investing. I think it's super, super important, and thank you for allowing me to talk about it with you here. It's one of my main passions in life. I don't know why everyone wouldn't love investing. Okay, so how do investors make money? All right, so the first thing to point out is that investors make money from several different ways, but the way that it's measured is by something called investment returns. And investment returns are also sometimes known as CAGR, or compounded annual growth rate, or they are sometimes called average annualized returns. And you may have heard me talk about this in another video. That just means that the amount of money an investor has made has been added together, those returns, and they've been annualized. It's an average, and it's an annual amount, and so that's expressed as often as a lump sum. But I urge investors to take a look at that year by year so you can see how much volatility you've had in your returns. But I digress. Okay, so let me get back to how do investors make money. All right, so that's how it's measured, is by the investment returns, and I've mentioned a couple of other ways that this is references that are used or terms that are used for these investment returns, CAGR as well as average annualized investment returns. All right, so what does that mean, and what is that made up of? Well, it's actually made up of three very, very specific things. The very first thing is what's known as a capital gain, and I sort of am throwing out some tax terms here, also because you're going to be seeing this on your taxes as well, in addition to assessing how investments that you own or you're considering owning are performing and how you can make money with those investments. So the very first way is with a capital gain. That just means that an investor sells an asset for more than they paid for that asset. Now, some investors are going to be doing this more than other investors. The way that most people invest now is through passive asset allocation, or long-term buying and holding of certain percentages of stocks, bonds, maybe some other asset classes over long, long periods of time. This is the most popular way to invest. It's not how I invest, as I've mentioned here before, but this is how most people invest. And this has worked well for a lot of people, but that's not what we're really going to talk about in this video so much as how investors make money with that method. Okay, so with that method, there is very little buying and selling happening, because usually with this method, an investor has just bought an index fund or a group, an index that represents a group of companies or a group of securities. It could be stocks or bonds. And in that case, since they've just bought that index, there's not a lot of buying and selling going on. If they're a long-term buy and hold investor, they bought that index, and the only time that really the transactions happen are when the companies or securities that make up those indexes change, and then the company that runs the index has to buy and sell those securities to hold what's in the index. So for most investors, my point is, if you're thinking, Camille, get to your point, my point is, for most investors, certainly buy and hold long-term investors, there's not a lot of capital gains going on. Okay, so let's say that you decide to sell one of the funds that you're holding as a long-term investor. In that case, then it's very likely you would experience a capital gain. But in general, for a buy and hold long-term investor, you're not going to be having capital gains. And that's one thing I sort of don't like about long-term investing, is gosh, a core principle of money and making money is selling an asset for less than you paid for it. And with buy and hold investing, you're sort of just missing that whole principle altogether, because you just buy the asset and you hold it forever and you hope that it will go up during the time frame that you do own it. And often it does work very well. It depends on, you guessed it, if you listened to me before, the economic cycles and what's happening in the economic conditions that are present in the financial markets. Okay, so capital gains are associated with building wealth. They are not associated with income, which pays the bills and living off of your investments, so much as they're associated with building wealth or increasing your wealth. Okay, now that's not to say that an investor can't live off capital gains. That's what real estate fix and flippers do, for example. They're always buying an asset with the hope of selling it later and having a capital gain from which they can live. Traders do this. More active investors do this. But like I said, most people don't have a lot of capital gains because most people are long-term buy and hold investors. Now, having said all this, we can also certainly have capital losses. Ouch. And that is much more, less fun, I should say, than capital gains. So that is one disadvantage of investing for capital gains, is that it can be a loss instead of a capital gain, which leads me to the second way investors make money, and that is with income from their investments. With the income component of making money, investors are receiving interest from bonds, for example, or dividends from stocks, for example. Those are the most common ways that investors make income from their investments, or make money from their investments, as far as the income component. Now, a lot of investors really, really love investing for dividends. A lot of people live off dividends, especially in retirement. So a lot of the people that watch my channel, maybe you are living off dividends and that was your retirement plan. So this is a way a lot of people live and how they make money. Oftentimes, if an investor is focused on dividends, they're not really going for capital gains. They're thinking, you know, it's great if I get capital gains, but what I really want is enough money off my investments to pay the bills. I want to be able to live off my investments. And that really, to me, is financial independence. When you can live off the income that your investments generate. So that's income. That's number two. Now, for tax purposes, the type of income you get depends on how it's taxed. So bond interest, for example, most of the time is going to be, and depending on the type of the bond, I should also say, it's frequently treated as regular income, like earned income. And sometimes there are tax advantages on the type, like I said, depending on the kind of bond it is. But dividend income, most United States stocks, for example, their dividends qualify for special tax treatment and a lower dividend tax rate. Okay, so that's sort of how that works. Now, ideally, what we really, really want is to have assets that have capital gains as well as income. And that's one of the things I love about trying to buy an asset for less than its value or less than its market value, but it's also an asset that pays income. And can that happen? Sure, it absolutely can happen. This is very common with real estate investments that are rental properties that pay income when they're purchased right, particularly related to good times during the economic cycle. And those assets increase in value. In that case, that can provide a capital gain as well as income should you decide to sell that asset, that investment, that real estate property. Another way that investors make both capital gains and income is by buying assets that are undervalued. In other words, they're cheap relative to their historical value or the their valuation. And in this case, Then an investor might buy a dividend stock that's paying them income, but they're buying it at a low valuation, thereby allowing them to set themselves up for a capital gain. If they sell that asset for more than they paid for it, and they earned income while they had it, then they've accomplished both of those ways that investors make money. All right, so those are the first two most common ways that investors make money. Okay, one more thing I want to say about this. Well, maybe two things. Okay, so people think of bonds as income investments only. That's because that's usually the advantage of bonds. At least it used to be, but now the interest rates on bonds are still fairly low. So it's important to note, though, that you can buy bonds when they're selling at discounts off of their face value, and they can actually increase in value. And that can happen when interest rates are declining, because declining interest rates make the value of bonds go up, all other things being equal. So keep in mind that works the opposite way. When interest rates are increasing, the value of the bonds will go down. So we got to be careful of that when we think about owning bonds as an investment that's always safe, that never fluctuates in value. And remember, there was one more thing I wanted to say about assets that can result in a capital gain as well as income while you own them. And another example of this that is becoming more and more common is owning an online business. Online businesses have become more commonplace every day, with so many marketplaces selling online businesses to individual investors like myself. You may have seen the video where I talked about I purchased a website a few months ago, and I bought it because it was selling at a fantastic valuation. It has paid me income while I own it, fortunately. And someone last week emailed me to ask me if I wanted to sell that website. And I would have, if I sell it, it will result in a small capital gain, fairly decent capital gain. So from that asset, that investment, I was able to generate income, and if I choose to sell it, I will also get a capital gain. I don't think I will, but I'll cover that in another video someday. If you're interested in that, let me know down in the comments. Okay, so how else do investors make money? The other way investors make money is the easiest way. It's such a nice way to make money, and that's from compounding. Those capital gains that you've made, as well as that income you've made, if you just keep that income in the account and you keep those capital gains in the account, those compound over time. And that's really nice because it's completely passive. This is one of the huge benefits of passive, long-term, that buy and hold investing, is that those assets compound over time. And I don't know about you, but my experience has been with a lot of investments that I just put aside, and it's money I can't touch. That compounding, it just happens. And before you know it, you look at it and the asset has compounded, it's increased in value. And that's really a fantastic thing. Now, I have to say, though, that the economic conditions and financial markets have to be favorable for that, because those assets can go down as well. Nevertheless, that income that you get from assets can continue to compound. Now, there's one more thing that you'll see reflected in the price of your investments, which is not really a way that investors make money, but it feels like you're making money because you look at your assets and you see, oh wow, this has really gone up since I bought it. Good job. And that is inflation. Yeah, assets will increase simply due to inflation. Now, this is kind of a bummer because then when you sell it, if you have a capital gain, you have to pay taxes on that inflation. And a lot of investors don't realize that assets become inflated just because of inflation. So it's really important to, when you invest, consider how much of this income and or capital gain is really due to inflation and how much is it due to something else that's happened here. So the three main ways to make money are capital gains, income, and compounding. How do you like to make money? Remember, retire certain.